of earnings, and IRB came out with its numbers. The PAT is actually down 25% on a year-on-year basis, although the margins have seen a bit of an expansion at 46.8%. The EBITDA as well has come in higher by 18%. So let's chat a little bit more about what happened in the quarter gone by and what's the visibility going forward. Anil Yadav from IRB Infra Developers joins in on the show right now. Anil, hi, good morning. Welcome to ET Now. Thanks for joining in. Just looking at your numbers right now, Anil, just wanted to understand why this PAT downtake, and do you think you can actually better profitability in the quarters to come?
I think last year, the same quarter, we had a one-time income of 370 crores on arbitration award. Hence, both the quarters are not comparable. And it will not be better to compare those quarters because of the exceptional income in the corresponding quarter of the last year.
If you look at business growth, can you tell us then what has been the real business growth then?
Yes, if you look at toll business overall, we have seen a very healthy growth, and almost 70% toll income has increased, and construction, there was a healthy increase in the construction income as well. And EBITDA has also improved. The debt equity has come down to 0.75:1. And going forward, IRB will be taking BOT and TOT project in the private InvIT, and private InvIT does not get consolidated. And there will be continuous repayment in IRB for projects which IRB has 100% ownership. So that will further reduce the debt equity on a long-term basis.
I can see that you've had robust toll collections and improved toll prices as well in the quarter gone by. But what's the visibility for the full fiscal? Do you think this kind of traffic momentum is going to stay?
So if you look at the April month collection, we have seen a 19% growth in the projects with IRB and the private InvIT put together. And we expect around 20 to 25% kind of growth in this full financial year as compared to FY23.
Can you talk to us a little bit more about what the outlook is when it comes to the order book guidance? What is it that you're looking at in terms of which segment it is that is going to see aggressive bidding under the current market conditions?
With respect to order book, we have talked about in our last con call as well. We will be eyeing an order book of close to 10,000 crores, which will be consist of BOT, TOT and HAM in the same order of the preference. And in terms of TOT order book, that provides toll revenue visibility for a long-term period. And also the O&M, which becomes a part of EPC revenue. If I can talk about O&M order book, today we have almost 25,000 crores of O&M order book, which will get executed over the period of 20 years. This means that gradually we will be executing almost more than 1,000 crores of O&M order book on per annum basis.
As to as well what the outlook is in terms of the JV losses, because that seemed to have impacted your overall profits as well quite adversely. Is there going to be more adjustments in the bottom line numbers, and what is the outlook in terms of projection?
In terms of the joint venture, which housed 10 assets, and couple of assets will be added in this financial year. And JV, there were two projects where the revenue share has started from the last quarter. And if you look at the last quarter collection, it was close to 560 crores plus the entire collection for the JV. And if I will annualize that number for FY24, that will be in range of 2,200 to 2,300 crores. Even if I assume that there will be a 10% growth, 5% tariff revision we got from 1st April, and even I assume 5 to 6% growth from the traffic, then there will be 10 to 12% revenue growth. And whatever the one time the revenue share has started, and impact is almost 50 crores on full basis. So that will get negated by this growth in the business. And further, we will add the new asset. Those will also add to the profitability.
Time then. Thank you for joining us and giving us an outlook on your overall profit number, the debt equity ratio, and yes, it's that one-time income that has impacted the profit. An order book of 10,000 crores is being eyed for FY24. All right, time for